This is the chart of you guys that want to trade every single market move. Entering and exiting the market multiple times a day, looking for the low of the day, looking for OB, looking for anything called setup to take. This is the chart of a guy that wants to trade once or twice a week, waiting for higher time frame to align before taking a trade. He is quite comfortable with waiting, but sadly, this is what many of us can't do. From looking at these two charts, you probably felt something right. You felt something right about one of these. Which do you want it to be? Hello guys, it's Mr. Lester right here, and I'm here to help you discover that. We're going to talk about the emotional cost and the monetary cost of trading. Having a trading plan, or a game plan as I call it, is a very important aspect of trading. Without it, you're just clicking buttons and you won't really be able to tell if you're profitable or not in the long run. Without a trading plan, you can literally cash 200 pips from the market and give it all back to the market the very next day. The price for not having a trading plan is an increase in the emotional cost of trading. As humans, we care about our investment, and in trading, the two major things we invest is our time and our money. Here comes the issue. If you spend 5 hours trying to analyze the market before taking a trade and you probably risk 1%, if that trade ends up becoming a loser, the loss will be more painful compared to someone that just spent 5 minutes looking at the chart, seeing that there is nothing there, and coming back probably in the next 4 hours and taking the same trade as you. If the trade ends up being a loser, the loss will be more painful compared to when you just spend 5 to 10 minutes analyzing the market, compared to when you come to the chart and you see that there's nothing and then you come back after five 5 hours or 4 hours. The emotional costs attached to these two trades are not the same. This is the reason why, as humans, trading needs to be as boring as possible, because we tend to place less emotional costs on boring activities. Deciding whether or not you want to become an intraday trader, which is entering in and out of positions in a day, or a swing trader, which trades once or twice a week, has more to do with your personality and your risk management model. Now, what do I mean by personality? Your personality traits can be how you react to things around you. For instance, you don't like being wrong, you have a never give up attitude, you don't accept defeat, and you probably have a lot of free time trading. No matter how many accounts you blow, you end up you keep on coming back. As human beings, it is difficult for us to change our personality traits. The only thing we can do is to accept it and embrace it, because that's actually who we are. Trying to change it will be temporary. Probably change it for 2 weeks. After 2 weeks, you're back to where you were. With this personality, when it comes to trading, you always feel the urge to overtrade. You always want to be in the market. You always want to have a feel of the market. And in case of losing streak, you tend to over leverage to recover your loss quickly. The best thing you can do is to identify trading as a long-term sport. And it is best to use up 1% of your account for funded account, or 1% of your personal fund. This way, you'll be able to take series of trades to satisfy your personality. This way, you'll be able to take series of trades to satisfy your personality, as trading is a number game. So by targeting 1 to 2 risk to reward ratio, you're actually good to go, as long as you don't go above 0.1% risk. So you can probably get stopped at and enter again, because you always want to be in the market. So it's something you have to embrace. When you embrace it, then you build your trading plan according to your personality trait, not trying to copy someone else. No, that's your personality. It is who you are. So you choose a trading system that suits you, that suits your personality trait. On the other hand, for you to decide to become a swing trader, this means that you probably don't have too much time to spend on the chart. You're probably working or you're going to school, and you don't mind missing those. You don't mind missing your setup. You're okay with the market coming to your area of interest before entering a trade. You're very patient to let the market come to you. So if you feel that these are your personality, these are your traits, then it will be wrong for you to start copying somebody that trade every time, and you start copying that risk model, which is risking 0.1% per trade. You're not going to be doing that, because you have less time in the market. So you want to increase your risks so that you can make up for the time you are not in the chart. So instead of risking 0.1% like the intraday trader, you can risk 0.5% or 1% on your funded account. And you can go as high as 2 to 5% on your personal account because you probably take one or two trades a week. So there's nothing wrong with that. The reason why you need to increase your risks for this kind of accounts is because of the fact that you tend to use wider stop loss, unlike day traders that use, I think, maximum of 10 pips for intraday trades. But for swing trades, you can use as high as 20 to 30 pips stop loss. So it's really smart for you to increase your risk so that you can use a decent low size. So as long as you manage your risk properly and you go for a good risk to reward trade, at least 1 to 2 or 1 to 3, then you'll be fine. Yeah, so for GPP USD intraday trade, we are looking out for the point of liquidity where they were equal high because we want the market to actually go above that area. So if we have seen that the market have taken out the liquidity, then we cannot take that area of interest as as our point of interest for our trade. So I'm looking forward to taking a stay from this area, probably targeting 1 to 5 or 1 to 4, depending on the stop loss. So so this is actually an intraday trade where we target probably discount area. So basically, we are trying to catch the eye of the week because the eye of the day. So I set my limit to that and probably come back in the next 1 hour to see what happened. So this type of trade, I trade, you probably risk 0.1% on your funded account because you can see multiple entry. The idea is just to look for area of liquidity, then you put your entry above those area of liquidity, then you target your 1 to 5 or 1 to 4. So it's really nothing crazy. So when you are trading this way, you are open to taking as many setup as possible because trading is a number game. So you want to take it on probably in a day. You want to take like 10 of this type of setup, and probably more than half will probably be right. And with your good risk to reward ratio, you probably um get it. So at this point, you can either set a limit order, then come back after 1 hour to see what the market has done. So it's just a matter of waiting right now for the market to show what it's going to do. So I can see that the momentum is shifting to the upside quickly. So it's probably going to take less than an hour to get to the area of interest. So I just quickly shift it closer to expect the entry because then my target is I usually target a minimum of 1 to 4 or probably maximum 1 to 5 or 25 pips depending on my stop loss. If the stop loss is less than 5 pips, then I probably target 20 pips. But if it's more than 5 pips, then 25 is like the least because we need to get high risk to reward ratio. If you're always closing at 1 to 2, 1 to 1, you probably not you probably have difficulty going long term. So that's just the idea behind trying to take 1 to 4. I mean, the market is approaching our area of interest very quickly. So, I mean, at this point, I'll probably enter the trade with my first entry just because I was on this chart. So, I enter manually. So, it is almost close of day, and the market has given us about 31 pips, and our target is 25 pips, so 1 to 4. And we are already at 1 to 5. We got peak of 1 to 5 and we're currently at 1 to 4. So since it's close of the day, we just close the trade manually. At least we hit our target. So even though we did not hold the trade to hit the full 1 to 5 we wish to reward, we were able to get 1 to 4, which is actually decent. So the main thing to try is to try and hold your trade for as long as possible. But the momentum is kind of shifting to the upside. It's not strong to the downside, so it's smart to close. So what's up, guys? That's it for today's video. Please subscribe right here and watch this video. I think this is for you. Peace.